Great to be here again. Thank you so much for joining us on the program. I'm Temple Ashaju. In the just concluded week, the Federal Executive Council on Wednesday precisely approved the 2018 to 2020 medium-term expenditure framework and fiscal strategy paper, which projects a GDP growth rates of 3.5%, 4.5% and 7% for 2018, 2019 and the year 2020 respectively. The medium-term expenditure framework also puts crude oil projections for 2018 at 2.3 million barrels per day, comprising 1.8 million barrels per day in regular crude and 500,000 barrels per day in terms of condensate. And this was done with a projected price of $45 per barrel at an exchange rate of 305 naira per dollar. This sort of forward guidance encourages domestic and foreign investors to invest more in an economy. In view of the plans, capital market authorities are not resting their oars as the Securities and Exchange Commission held a historic meeting with secretaries of listed companies to dialogue on burning issues like this, chief among which is the need to clean up some corruption-related practices in the investment space. Looking ahead, the second quarter Capital Markets Committee meeting scheduled for next week Tuesday, we will be privileged to preview issues with a regulator on the program this evening. He'll be taking us through what was discussed at the last meeting and how to marry that with the meeting that will be coming on board next week Tuesday. Meantime, let's look at what's in the news for us to chew. Now, the Federal Executive Council, FEC, on Wednesday approved the refinancing of the country's domestic debts into treasury bills worth $3 billion as part of the overall strategy of government to reduce the cost of borrowing. This week, at a meeting of the Debt Management Office with journalists in Lagos, Director General Mrs. Patience Oniha explains that the refinancing are not new issues.
Dollar treasury bill. It is saying we will borrow $3 billion in US dollars and use the proceeds to repay some of our treasury bills that are outstanding, part of that 3.7 trillion. So it's not a dollar treasury bill we're issuing. In fact, we're going to borrow the US $3 billion for a longer term. Okay, so they're not treasury bills. They'll be longer tenured instruments and at a lower cost. As most of you know, when treasury bills are issued, the auction notice is in the public domain, so is the result. So treasury bills are issued for a tenure of 364 days maximum, and the discount rate is about 18% to government. When you compare that with the rate of 6 to 7% of borrowing in the international markets, you realize straight away that there's a huge savings of 11 to 12%. So that's what we're trying to take advantage of. It's not a new borrowing, so it's not going to increase our debt stock. It is simply going to convert some of our Naira debt into US dollars for a longer tenure and at a lower cost. I think the only risk that you can, if it may be called a risk at all, is that we're moving from a Naira borrowing to a US dollar borrowing. Remember the point that I said, the benefits of doing that. It is longer tenure and it is cheaper. So by the time that that borrowing in US dollars is due for repayment, several of the initiatives and policies of government would have materialized. So you're not looking at repaying next year or 2 years' time. So the Naira is either stronger in terms of exchange rate or at best remain at current levels. Okay, so that's about it. So there's really no exchange rate risk. Not in the long term, but don't forget, the central bank is the banker to the federal government. So when the dollar proceeds come, it goes to the central bank, and that increases external reserves. The central bank will give us Naira, which is what we'll spend, use to redeem the treasury bills. So that $3 billion goes straight into external reserves, while we get Naira and repay some of the treasury bills that we're talking about.
The new Director General of the Debt Management Office there, Mrs. Patience Oniha. Let's go for our next story. AFREXIM Bank, supranational trade financial institution, Africa Export-Import Bank is opening its shareholding to the investing public through the issuance of depository receipts. The deal, being arranged by a Mauritius-based firm, SBM Group, will see AFREXIM Bank launch a $300 million equity offering using the depository receipts backed by Class D shares. The depository receipts, whose listing was approved on the Mauritius Stock Exchange, is subject to fundraising by the end of September. AFREXIM Bank explains the rationale for issuing the depository receipts is hinged on the need to enhance its capitalization in order to narrow the trade financing gap in Africa, currently estimated as $120 billion. The issue represents the first supranational bank depository receipts through an African stock exchange. One of Nigeria's 5 Tier 1 listed lenders, Zenith Bank, has announced the 25 kobo interim dividend for the first half of 2017. The large-cap commercial bank reported gross earnings above 380.44 billion naira, a near 100% jump on a year-on-year basis. Pre-tax profits is seen higher at 92.18 billion naira, driven by a massive 389% growth in non-interest income. Analysts at FBN Quest say a marked upward revision to consensus pre-tax profit forecast for full year 2017 is expected. And the Securities and Exchange Commission this week set up a joint committee with the secretaries of listed companies on the Nigerian Stock Exchange, and that's to investigate fictitious shares ownership in the capital market. The decision was reached at a meeting in Lagos where the Director General, Mr. Munir Gwazo, gave a 6-month window to shareholders to prove their ownership of existing investments.
The main thrust of the meeting, like you say, is first of its kind.